Today I'm going to talk about all the last minute ways you can reduce your income tax for the year of 2024, and even if you're watching this in 2025, I have some tips for you. I'm also a last minute kind of guy, so remember to subscribe to the Telegram to earn more from your credit cards and savings account, and turn on notifications so that I can send you last minute financial updates. Take note that there is an annual cap of $80,000 across all the different tax relief you can get per year. However, charitable donations to approved institutions are not subject to this limit. That brings me to my first method, which is charity. When you donate to eligible charities in Singapore, you get a 250% tax relief. Now, to be perfectly clear, you can't actually profit from donating money, but the tax savings is substantial if you are of a higher tax bracket. For example, if your assessable income is $100,000, your tax bracket is 11.5%. If you donate $1,000, you get a 2,500 tax relief, which means you save 11.5% times $2,500 in taxes. That's $287.50 of tax savings. The way I see it is like having the government subsidize your donation to a cause you are passionate about. The philosophy is similar to using credit cards to gain rewards on your charitable giving. We don't donate for the sake of getting benefits, but getting credit card rewards and tax deductions means that we can donate more than we were originally able or willing to. Anyway, I'm going to have a fundraiser really soon, and I hope to launch it by the end of this year. Yeah, as you can probably tell, I'm also someone who's very last minute, so say subscribe to the Telegram for more updates. Donations in 2024 will get you tax relief for income earned in 2024 as long as you do it latest by 31st December 2024. The next method is CPF top up to yourself. As many would know, you can top up to your CPF special account or MediSave and get tax relief on the first $8,000 per year. This can only be done up to the basic health sum of $71,500 for your MediSave, or the full retirement sum of $205,800 for your special account. CPF top-up is instant via PayNow, and you should do so latest by end of 31st December 2024. For the truly last-minute warriors, I tried paying after 11 PM on 31st December before last year, and it was in time for last year's tax relief. So please do it earlier in case of any technical difficulty that may happen. If you're watching this in 2025, consider instead using eGiro to top up with your HSBC EJA bank account because you can get 1% cashback. Tax relief plus 1% cashback, that's pretty nice, but again, it is too late for 2024, so do it next year ahead of time. This was helpfully shared by chat member Adam in my Telegram group, so join there if you want to earn more from things like your credit cards and savings account. You also need HSBC EJA account to get 1% cashback for your gyro transaction, so head over to my Telegram and search for HSBC EJA to find out more about this account. Should you actually top up? I made a video some time back on why I wouldn't do it, but I have since started topping up my CPF last year and also this year for tax relief. My personal preference is to prioritize SRS first, which I'll talk about later in this video, before seeing if I have enough for my short-term and medium-term goals. If so, I'll top up my CPF as well. Talking about CPF top-up, you can also top up your loved one's CPF for tax relief, and there's another $8,000 worth you can get from here. Loved ones refer to parents, parents-in-law, grandparents, grandparents-in-law, spouse, and siblings. Note that while you can top up to your children's CPF, it will not be eligible for tax relief. When you top up to an eligible CPF member of age 55 to 70 this year, your loved one can also get this thing called MRSS, Matched Retirement Sum Scheme. For the first $600 you top up, your loved one will get a dollar-to-dollar matching from the government, and you also get tax relief. Eligible people include those aged 55 to 70 with less than $102,900 in their CPF retirement account. They have a monthly income of $4,000 or less, annual value of property less than $21,000, and they do not own more than one property. You can check whether or not you are eligible over here in this link. For example, if you top up $5,000 to your mum who is 65 and meets the eligibility requirement of MRSS, you will get tax relief on the $5,000. She will receive that $5,000 in her retirement account plus another $600 from the government. Note that this is the final year to get tax relief on MRSS. From 2025, MRSS will no longer get tax relief. However, the match sum will increase from $600 to $2,000, and there will also not be any age cap from next year onwards. So the pros of topping up in 2024 will be that the first $600 will get tax relief plus MRSS, while the pro of topping up in 2025 is that more of your top-up gets matched by the government, but you don't have tax relief on that amount. Is it really time to invest now that markets are so high? Well, historically, the S&P 500 has a good chance to go up even more following a new high. Markets trend upwards over time, so remember that time in the market is more important than timing in the market. Time in the market is impossible, but investing regularly can help you build your investment portfolio over time and average out your buying costs. Instead of investing all your money at once, by investing a fixed sum of money at regular intervals, you can buy more shares when prices are low and fewer when they are high. Use Moomoo regular savings plan to invest regularly because it's very easy to set up your personal plan, and Moomoo also offers zero commission trading of US stocks and ETFs. I've been investing in these ETFs since 2022, and here are my returns as of December 2024. When you start a regular investing plan with Moomoo, you can start and stop at any time, and you can start from as low as $5 and increase or pause your recurring investment anytime. If you started to invest $5 on QQQ last year, till today you will get over 14% return. Also, enjoy automated bank transfers and currency exchange to effortlessly invest a portion of your monthly income so that you can automatically dollar cost average in index funds and broad market ETFs without thinking about it. Moomoo is also giving away free Tesla shares worth up to $467 and 2.1% per annum interest booster on your Cash Plus subscription. It's Christmas, so they are giving you a chance to participate in 12-day Christmas lucky draw and have a chance to get as much as 1,500 Sing dollars. The total reward for new users can go up to 2,326 Sing dollars. If you registered through my link, Moomoo is offering a Christmas special gift just for my subscribers where you can get 80 Sing dollars if you deposit 20,000 Sing dollars within 30 days of registration. This offer is for a limited time only, so don't miss the chance and click on the link in my description box to find out more. Of course, you don't have to choose and you can top up in 2024 and in 2025. But if your budget is limited, you may want to consider which is more beneficial for you. Generally, if you are just topping up $600 or less, it's better to do it before 2024 ends since you can get both the tax relief and MRSS. If you are topping up significantly more than $600, MRSS starts to make more sense from 2025 onwards because more of that amount will be matched. Finally, we can also top up to our Supplementary Retirement Scheme, SRS, for tax relief. If you're new to SRS, make sure to check out my earlier video on what to consider before you make SRS contributions. If you have not yet opened your SRS account, note that different banks have different processing times. For DBS, if you apply via DigiBank online between 7 a.m. to 10 p.m. each day, or 7 a.m. to 7 p.m. on the last business day of the month, your account will be opened instantly. For OCBC, the bank states that accounts will be opened instantly using MyInfo via SingPass login. So these two accounts will be very useful for last-minute warriors. For UOB, it can take 4 working days, so avoid UOB if you are in a hurry to do your tax relief in SRS for year of 2024. All three operators offer similar features for their SRS accounts as far as I can tell, so it's up to you to decide which bank to go for. For contributions to be recognized this year, make sure you contribute according to these timelines. For DBS, you need to transfer funds before 7 p.m. on 31st December via DigiBank. For OCBC, you need to transfer before 11:59 on 31st December via OCBC Online Banking or their app. For UOB, you need to transfer funds before 7 p.m. on 31st December via the UOB Tomorrow app. After contributing funds to your SRS account, make sure you invest those money because SRS accounts only give 0.05% per annum, so your funds will lose value to inflation if you just leave it alone in the account. I will review how I've been dealing with my SRS soon, so stay subscribed to the Telegram for more updates. So Happy New Year everyone, and hope you have a good 2025, and do help me subscribe to the Telegram so I can send you useful updates throughout the next year. Tap here to see the best credit cards and bank accounts in the past year, according to me, and I'll see you in that video.